Big news for Bitcoin as banks are given the green light to work with blockchain. Hey guys, what's going on? Jeb here, and in today's video we have some very important news to talk about regarding the OCC, the Office of the Comptroller of the Currency, giving banks the green light to work with blockchains that provide stablecoin and cryptocurrency services. Guys, this is a big step towards mass adoption of Bitcoin and cryptocurrencies, as banks will be able to provide cryptocurrency services to the general public. Even to this day, most people in the United States do not even know what Bitcoin is, but almost all of them have banks. And as banks around the country begin rolling out cryptocurrency services, we are going to see adoption skyrocket, and that's what we're going to be talking about in today's video. If you do enjoy today's video, consider hitting that like and subscribe button. But without much further ado, guys, let's go ahead and dive right on into it. Before we get started, I do want to mention that this channel is sponsored in part by our Bybit affiliate link. If you would like to get started trading over on Bybit, one of the fastest growing cryptocurrency exchanges in the industry, I encourage you to sign up with our link in the pinned comment and in the description box down below. Thank you very much. But let's go ahead and jump on to some news. Crypto markets jump on OCC approval for banks to use blockchain. This article just dropped this morning. After a flurry of negative regulatory news, investors are pleased to see positive regulatory news allowing stablecoins and public blockchain integration into the traditional banking sector, said Justin, managing partner at Santa Monica-based Blockhead Capital. We're going to get into exactly what this means, but before I even do, I want to outline that this is a story of adoption. This is a story of groundwork. This is a story of foundation laying, and this is one of the things that is going to help us drive towards that goal of cryptocurrency mass adoption. Everything in this article should be viewed in that light. The letter addressed national banks and federal savings associations participating as nodes on a blockchain and storing or validating payments made in native digital assets or stablecoins. We're going to get back to that one in a second. The OCC's letter stands in contrast to a bill introduced in the last congressional session that would have required stablecoin issuers to obtain bank charters. This broke on December 2nd, 2020. U.S. lawmakers introduced bill that would require stablecoin issuers to obtain bank charters. This move was taken in a multifaceted effort to increase the regulatory oversight of Bitcoin and cryptocurrency transactions. There was also some talk in Congress about increased KYC or know your customer requirements on withdrawing Bitcoin to private wallets from exchanges. The press release stated digital currencies whose value is permanently pegged or stabilized against a conventional currency like the dollar pose new regulatory challenges while also representing a growing source of the market liquidity and credit risk. The 18-page bill would specifically require stablecoin issuers to obtain a banking charter, require approval from the Federal Reserve, Federal Department Insurance Corporation, or the FDIC, and the issuer's specific state or federal bank regulator. This would also require those same entities to conduct an ongoing analysis of any systemic risk and require issuers to have FDIC insurance and maintain reserves for easy conversion back into US dollars. Now, this isn't the main point of this video, but it does tie into my main point, so I'm not going to talk too much about this. If you'd like, I can do a dedicated video on this proposal from the Congress, as it does still have implications, even though it broke last month. But essentially what this is saying is that if you're going to launch a stablecoin, you, for one, must have reserves backing those stablecoins, even if it's fractional reserve lending in the same way banks do, and you only have a certain percentage of reserves. You must hold reserves. And it also says that stablecoin issuers must be banks. They must have a banking charter, and they must have gone through all of the regulatory approval that a bank must go through, and they must have FDIC insurance. This is something that is going to be very contentious in the cryptocurrency space. Many people are going to say this is a good thing. This is allowing adoption for Bitcoin to continue. But some other people are going to say this is a very bad thing for cryptocurrency because we don't want the government getting their hands on stablecoins lest they start to get their hands on cryptocurrency. I would love to hear your thoughts on that in the comments section. What I would propose is that if stablecoins must be issued by something like a bank, how does that really make a stablecoin any different from the US dollar, as it would be under the exact same regulatory scrutiny? Definitely something to think about. Tell me and I can make a video on that. Anyway, the reason I'm talking about this is because it plays into the news story that we're discussing here about the OCC. So let's jump back to that. Notice the letter addressing national banks and federal savings associations, those being like credit unions, participating as nodes on a blockchain and storing or validating payments made in native digital assets or stablecoins would be allowed. What the article from a little over a month ago is saying is that if you want to issue a stablecoin, you must be a bank. But what this is saying is that banks are able to operate as stablecoin providers, validators, nodes, what have you, and they can also work with cryptocurrency. This opens the door for the ability for banks to not only issue their own cryptocurrencies and stablecoins potentially, but provide services for those that already exist. Perhaps in just a few years, because of news like this coming out of the OCC, you could see cryptocurrency portfolios in your bank account right along checking and savings accounts. Is that a service that you would want to use? Probably not. I don't think I would use that service because I wouldn't want to put my decentralized unhackable cryptocurrency into the hands of a central authority like a bank. But the reason that's important is because it provides adoption channels by which people can come to know the cryptocurrency space and they can come to understand cryptocurrency. And it's also going to make cryptocurrency look much, much less sketchy if banks are offering the ability to hold accounts in that. Just a thought, but it's something that could come to pass. I would love to hear your opinions on that in the comment section down below as well. Before we go, guys, I do want to mention the Cryptocurrency Technical Analysis Academy. As you guys know, we are currently running a sale on CT2A for $75 off. You can get access to 36 videos and over 12 hours of high-quality content teaching you everything you need to know in technical analysis. Something I want to point out about CT2A is it's been around for 2.5 years. We've had over 2,800 students go through the academy, and we have a refund rate less than 1%. That means 99% of our students, even though we have a full 14-day money-back refund guarantee, and they can email us and get a refund, don't do it. That tells you something about our product. That tells you that people want our product. And just about every time someone does ask for a refund, they always say, trading's not for me. I'm not going to invest the time. Well, if you think trading is for you, those 99% of people speak for themselves. This academy is something that you can invest in and something that will help you in your trading. If you would like to talk to some of those students, you can join our Discord server down below. I want you to go get a God's honest testimony. That's why we don't have testimonies on our website, because it'd be very easy for us to fake those. Not that we would, but how would you trust them? Go join our Discord server down below or join us in the comment section. Talk to our people and see what they think. We don't even have affiliates right now, so none of them are being paid to sell CT2A. The only salesman for CT2A is moi, and I am very thankful for all of our amazing, amazing students for making this channel possible. Anyway, guys, remember, follow the first link in the description. Get signed up for CT2A today. Use that $75 off coupon code New Year's 2021. But like I said, that is going to wrap it out for today's video. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.